Hi, this is Priyanka. Welcome to Goldstone Finvest. Time for daily market update. After closing strong in the previous session, the benchmark indices lost a percentage on the last day of the financial year 2021. At close, the Sensex was down by 627 points at 49,509 and the Nifty was down by 154 points lower at 14,690. The Indian market snapped a two-day winning streak on Wednesday and closed with losses of more than a percentage. The S&P BSE Sensex closed 627 points down at 49,509 and the Nifty ended 154 points lower at 14,690. Sectorally, buying was seen in realty, FMCG, consumer durables and metal stocks, while profit taking was visible in banks, finance, power, telecom and energy stocks. Weak global cues dented the rally on Dalal Street, which is seen in the last two trading sessions. A rise in the US bond yields triggered risk-off sentiment along with a rise in the COVID-19 cases. Experts advise that the weak cues from across the global forces the domestic market to shed yesterday's optimism. US market had a weak close after the US bond yield reached near 14-month high level, while European and the Asian market followed the trend. Private banks were the sectorial laggards due to selling seen in heavyweights. However, looking at mid-cap, the mid-cap and small-cap stocks remained in positive territory. The Nifty, after a two-day rally, found itself bear-trapped. It remained under selling pressure throughout the last trading session of the financial year 2021. The weak global cues weighed on the sentiment on March 31st. After opening lower at 14,811, the Nifty traded in the range of 14,813 to 14,670 with negative bias. It ended the day with 14,690. The Nifty formed a bearish belt hold candle and also formed an inside bar as it traded inside the trading range of the last session. The index formed a bearish candle on the daily charts as the closing was lower than the opening levels. Experts expect that the index to remain in the range bound and 14,900 will be the crucial for an upside towards 15,100. Considering the strong moves of the last two trading sessions in both directions, traders should sit on the fence without taking any directional bet. The weak performance of the day, notwithstanding financial year 21 was a best facial year ever in absolute terms, with the Sensex rising almost 20,040 points and Nifty adding 6,092 points. On the option front, maximum put open interest was seen at 14,000 followed by 14,500 strike, while maximum call open interest was seen at 15,000 followed by 16,000 strike. Call writing thus was seen at 14,700 then 14,800 strike, while put writing was seen at 13,800 then followed by 13,500 strike. This data indicates that the wider trading range for the Nifty could be 14,300 to 14,500 to 15,000 to 15,200. India VIX remained flat at 20.64 levels. The Bank Nifty opened negative at 33,764 and remained under pressure in the first half. Banking stocks did not hold well and the index ended the day with a loss of 571 points at 33,303. The index has been underperforming the broader market for the last few sessions and formed a bearish candle on the daily scale with a longer lower shadow. The Bank Nifty has to cross and hold above 33,500 levels to witness an up move towards 34,000 and 34,500 levels, while on the downside support is seen at 33,000 and 32,500 levels. In percentage terms, it was a best in the last 11 years. All the sectorial indices gave positive return in this facial. Among sectors, IT, bank, energy and infra sectors fell by 0.4 to 1.7%, while the PSU Bank Index added over 1%. BSE Mid-Cap and Small-Cap indices ended in green. On the sectorial front, PSE Bank and Power indices shared a percentage each, while Realty and FMCG indices added 1% each during the day. What can a trader expect tomorrow? Lack of follow-through to the last Tuesday's strong price action is indicating the fact that the market is still a sideways consolidation zone. In fact, after today's a very strong correction, close observation of the last 9 trading sessions is pointing that the Nifty may be carving out a new consolidation zone inside the band of 14,900 to 14,300 levels. Hence, in the next trading session, if Nifty trades below 14,670, it will make an attempt to bridge the bullish gap present in the levels of 14,617 to 14,572 zone. Usually, such gap acts as support points on the downside, and hence some buying should be seen if the index approaches the gap zone. If index closes below 14,570, it can induce more weakness, eventually dragging the index down by 14,300 levels, which as of now looks like the lower end of the consolidation zone. Upside strength shall be expected only if the index closes above 14,900 with the initial targets of 15,100 levels. The Nifty has to cross and hold above 14,750 zones to witness an upmove towards 14,900 and 15,000 zones. While on the downside, the support is existing at 14,600 and 14,500 levels. As stated by Goldstone expert, traders should trade extremely cautiously with strict stop losses and should follow our support and resistance levels on strict basis. Traders should limit leveraged positions and focus more on the selection of the stocks. In the absence of major event, global cues and COVID-related updates will remain in focus. Follow support and resistance level along with trading call as published on our Telegram and YouTube channel. For regular updates, like, share and subscribe to our YouTube and Telegram channel. Also follow us on Twitter and Instagram. Be a part of Goldstone family on Facebook. Views by Goldstone Finvest. Let's build fortune together.